Okay, thanks everyone. Going to do a little quick look at Tesla here, a little technical analysis lesson. I know I got a lot of new students signing up, so thank you. Anyway, those of you who are really interested in Wall Street history, there's a really good book you should check out. There's actually a couple of them. I've read this one, Empires of Light, and this is directly involves Tesla. Basically, the way I understand it, Tesla came over from, I think he was Romanian, maybe, or maybe Italian. I'm not really exactly sure where he came from. And a lot of those borders change a lot. But anyway, he came to the United States and he met Thomas Edison. And the story is that Thomas Edison said, "Hey, if you can do this, whatever this was, some sort of sick electrical thing, um, I'll give you $50,000." So Tesla did it, and then Edison was like, "Oh, I'm not going to give you $50,000. I was joking." So Tesla went out to Pittsburgh and worked with Westinghouse. And it was the battle of AC versus DC. And I get him confused. I think AC is the one that we still use now. Edison was DC, Westinghouse was AC. Now, George Westinghouse, he got rich by making air brakes for railroads. But anyway, for those of you who are interested in Wall Street history, this is a really interesting battle. Things don't change, right? I mean, what is going on now? Big ego guys battling each other. There you go. Tesla versus Edison, the current war, Empires of Light. So, for those of you interested in Wall Street history, check it out. Now, let's go look at Tesla, the stock. And of course, Tesla was a hairband. Yeah, I guess I'm dating myself. Yeah, I mean, there were so many horrible hairbands. Nothing against Tesla. Maybe they were really good. But anyway, all right, shut up, Mark. So let's look at this chart here of Tesla and let's just see what we see. Now, notice how the market rallied and we got to there and had resistance. Well, why was there resistance there? Was it a coincidence? And the answer is no. There was resistance there because there was resistance there. You got people who bought here who regretted doing so because once they bought, the market just kind of fell out of bed. And a lot of them say, "Hey, man, I made a mistake. If this ever gets back to my price and I get out at break even, I'm going to." So when you climb back to that level, buyer's remorse creates resistance at the same level that had been resistance before. You could see this down here. I mean, eventually the buyers overpowered the sellers, but resistance tends to form at former resistance levels. What do we have on the downside? Support forms at former support levels. This is because of seller's remorse. People sell at the bottom and then the price goes higher and they're like, if it gets back to my level, I'm going to buy my shares back if I can get them at the same price I sold them at. So remorseful sellers placing buy orders at levels that had been support before can make support intact. Remorseful buyers placing sell orders. Wait, did I say that right? All right. Remorseful sellers placing buy orders can make support stay intact. Remorseful buyers placing sell orders can make resistance stay intact. So buyer's remorse, seller's remorse. Now, what else can we see here? So just like buyer's remorse can make resistance stay intact, buyer's remorse can turn what was support into resistance. People buy here, price goes lower. A lot of the people that bought are like, I made a mistake. If I can ever get out of this at break even, I'm going to. So if you have enough remorseful buyers placing sell orders at the level that had been support before, support can become resistance. Seller's remorse can keep support intact. It can also make what was resistance turn into support. People sell, the price goes higher. They're like, I made a mistake. If I can ever buy my shares back at the same price I sold them at, I will. So when the stock finally returns to the level that had been resistance, if enough remorseful sellers are placing buy orders, the level that was resistance becomes support. Now, let's look at some gaps here, or gaps are fast moves. As we just saw, one of the main reasons why we get resistance is because of seller's remorse. People sell, you sell it at 10, it goes to 15. They're like, if it gets back to 10, I'm going to buy my shares back. Well, when you gap through price levels, there's no trading. And it's technically not a gap, but if you move quickly, it's the same principle. You just don't have enough time for there to be this large group of sellers who are remorseful, who are going to be buying on the way back down. So when the stock eventually reverses and gets back to those price levels, you're not going to have the typical amount of buy interest that you would, because you just don't have that big group of remorseful sellers trying to buy stuff back. The opposite occurs in a situation like this. You move really quickly through the price levels. It's not technically a gap, but it's the same principle. One of the main reasons why we get resistance is because we have remorseful buyers. Someone buys something at 10 and it goes to 8, and they say, if it gets back to 10, I'm going to sell it. Well, when you move really quickly through price levels, you just don't have enough time for there to be this large vested interest of remorseful buyers who are going to be selling on the way back up. So you rip right back through those levels, because when the buyers come in here, they have a hard time finding sellers. When the sellers come in here, they have a hard time finding buyers. So just remember, everybody, resistance can stay intact because of buyer's remorse. Support can turn into resistance because of buyer's remorse. Support can stay intact because of seller's remorse. Resistance can turn into support because of seller's remorse. If you make a rapid move through price levels going in one direction, and then eventually you get back to those same price levels moving in the opposite direction, there's a good chance you make a rapid move. All right. So levels, trends, momentum, psychology. That's what you need to think about. Forget all this nonsense, or Fibonacci or Elliott wave or Gann theory or whatever. I teach based on what I learned in the institutional world trading, where I was for 20 years, and no one in that world uses those bizarro quote unquote techniques. All right, everyone. Hope this helps. If you like to read, check out those books. They're really good. And I'll talk to y'all soon.